still talking commodities. Now I'm being joined by Okpeyemi Oguntade. She's an analyst with the Economic Research Unit of Financial Derivatives Company. Good morning to you, Okpeyemi.
Good morning.
So looking at the numbers from this morning, oil prices, Brent crude has remained below $60 since the beginning of the week. As of this morning, about $57.05 per barrel. And in spite of this sharp fall, the Central Bank of Nigeria is reporting a 7% increase in external reserves.
Yes, oil prices have been declining since the beginning of the week, but the thing is, the time differential between lifting crude oil and the payment for those crude products is about 90 days. So it takes time before you can feel the impact of this movement in oil prices. As at April this year, oil prices were as high as 65, even going as high as $7 in June and in May. So that's why that's the economic rationale behind the fact that the CBN can increase its foreign exchange reserves by about 7%. To $31.85 billion this morning, because the higher oil prices from the previous months are now coming into effect 90 days after in July.
And also we're seeing the same thing happening despite the issues that are coming out from Greece, Iran, nuclear talks, and of course China markets also seeing a little bit of fluctuations. But let's talk more about the agri-commodities, because we'll be focusing more on the crude commodities later on the show, on the Business Incorporated later on the day, I beg your pardon. And we're seeing that favorable weather conditions for harvesting has been pushing down the price of grains, for instance. Let's start with cocoa. Cocoa is down about 0.95%. Investors are still taking a hard stance on the soft commodities, on these agri-commodities, as it were.
Yes, the slowdown in the Chinese economy is really affecting the commodities market, because China is a huge buyer of these raw materials from commodities. And for cocoa specifically, traders are worried about the crisis in Greek spreading to there being a contagion in the Eurozone, because the Eurozone processes about a third of global cocoa beans production, about 37.6%. So traders are anticipating that the Greek crisis will have a negative impact in the Eurozone, and that would lead to a decline in the demand for cocoa beans, which is why cocoa prices declined this week. However, the shortfall in supply from Ghana and Ivory Coast is helping to maintain prices at above 3,000 in the market.
So what impact is this going to have on some of those major commodities that we consume here in Nigeria?
Well, for cocoa, I mean, cocoa is one of our major exports in Nigeria. We're the fourth largest exporter of cocoa. And for confectionaries, I expect that the decline in cocoa prices is very marginal, because cocoa still has a year-to-date increase of about 11%. So I expect that cocoa prices for now would have the decline in cocoa prices would have a negligible impact on confectionaries in Nigeria.
What about sugar and palm oil?
Well, for sugar, prices have been declining because of the US dollar strengthening. And this was because strengthening of the US dollar usually encourage producers of sugar to increase their export quantities into the market. Case in point would be Brazil. The Brazilian real has depreciated against the US dollar by about 30% since the beginning of the year. And this has encouraged Brazilian producers to sell off, increase their sugar exports within the market, and increasing the profit from sales in the US dollar once they convert it back to their local currency in Brazil. So this has led to the decline in sugar prices, because now we have an oversupply of sugar within the global market. So,
we've been talking about the El Nino weather. Is this likely to continue to be a problem in the days coming?
Yes, El Nino weather is still going to be very much a threat to agricultural commodities across the globe. More recently, the U.S. weather forecasters have released a report showing that heavy rains within the Midwest region, it might actually lead to flooding, because rainfall fall in this past week have been 3 inches to 5 inches above the average rainfall rates in late June. So there might be flooding in the U.S. in the coming weeks.
Oh, well. So it's looking like a gloomy outlook, more like or less than a positive outlook, because we've got weather conditions coming in. We've got uncertainty on the global financial markets as well.
Yes, it's looking really gloomy. I mean, specifically for China, the stock value has gone down by almost a third since its peak in June. And anything happening in China usually affects a lot or affects the globe because they're a huge buyer of all these commodities. They're second largest buyer consumer of oil and of sugar and all this stuff. So the fact that China's economy might slow down, it's promoting negative sentiments
among investors. It's a scary one indeed.
Within the market.
Well, thank you so much, Okpeyemi, for joining me on the program this morning and for flashing up those numbers for us. Okpeyemi Oguntade is an analyst with the Economic Research Unit of Financial Derivatives Company Limited. Now, Sub-Saharan Africa is one of the major markets for German firms, some of which are listed on the Frankfurt Stock Exchange. But as the Greece debt and Eurozone crisis are yet to be firmly and finally resolved, what are the likely long-term impact of the crisis on German companies such as automakers BMW and Volkswagen? Here's Javier Agudas of Deutsche Welle TV at the Frankfurt Stock Exchange for Channels Television.
Well, if we take a look at the companies that are listed here at the Frankfurt Stock Exchange, and especially in the DAX, which is the main German index, most of those companies are global companies that operate in almost every major market. So, of course, they are sensitive to any type of development in the global economy. But if we're talking about the Sub-Saharan Africa segment and the emerging countries there, especially, this crisis is all about the euro, about the currency. And if the euro drops sharply, which many predict, then that will have a consequence on the United States dollar, which will get more expensive. And that has problems for many of the emerging countries that might cause economic trouble. What does that mean for the German companies? Well, the German companies are export-oriented. So what do you need in order to get your exports going? You need clients abroad who buy those products. And that will have a consequence if the emerging markets have economic trouble because they are not able to buy that many German products. That is one of the consequences. The other consequence is more positive because if the euro drops, on the other hand, the prices of German products are less expensive. And that, on the other hand, will increase the likelihood for foreign customers to buy the German product. So we have a positive and a negative side here.
Well, thank you so much, Javier. We'll keep on looking at the positive and negative sides. And for those folks who enjoy driving BMWs and Volkswagens, you might have to start paying a little bit more in the coming days. Well, that's it on today's edition of the program. I'm Harriet Agbinyi. Have a profitable day.